Good morning, guys. Welcome to this Friday, March 14th, and it is rollover Friday. So if you haven't rolled to the March expiration, your charts may look funny. If you want to stay on the H expiration, you have to make sure you stay with backfill unchecked. Long-term charts usually don't work too well, but I just roll it and wait for the volume to roll with me instead of trying to be too cute about it. But if you want to trade the March expiration still, you have to just kind of stick with it. And the way you do it is you turn off this and the chart properties on the short end, you can turn off this use continuous checkbox, and that should give you March backfill for the chart as well. Anyway, so rollover day. I'm on the June expiration on the micros and the ES and Nasdaq, and as the day progresses, you're going to see more and more volume fill in. You can see it's pretty light still, not a whole lot of volume is rolling over just yet. So probably this day is going to be a pretty light volume day on the new contract. Overall, though, the gap was to the upside. We were closing here pretty much to the downside this morning, and no, just yeah, this morning. Losing my mind. Now we were closing down on at the close yesterday on the downside, the lower end of the range, and then we gapped up the rollover, and they've been trading up since. We'll see if that can hold on or if that's going to turn into something. But at this point, as the volume rolls, we'll see how this whole thing shakes out and how they come together. But so far, the gap up is on the June contract, and we'll see if they can make it go out of this and start taking this any higher. In terms of news, we don't have a whole lot this morning. Consumer sentiment at 10 o'clock, that's about it. So a pretty light news day to work with. So rollover, light news day. Just have to we just have to see what happens with this free-for-all selling, which has been going on. That's not been free for all, but it's been a pretty good move to the downside. And so far, the market is definitely in a pretty jittery spot. There's still a lot of volatility to come. There's still tariff stuff going on, and it's going to be like that until they get a handle on get a handle on those the tariffs, and that they're going to come out with this reciprocal thing beginning of April. So I would expect the market to be volatile. The selling, I think we should be pretty close to the bottom, I think, at this point. They've been a good 10% to the downside. It's so the obvious fear, I think, is out of the market in terms of just panic selling. At this point, people are stuck in positions, probably not going to sell them. Probably going to sit on positions and wait for the market to turn, which it will, as things start picking up again. So I'm not too worried about this. For me, this whole sell-off feels very much like an overreaction, but yes, because of uncertainty. There's nothing in the fundamentals on the companies. The last earnings reports were good to the upside. A lot of those big companies doesn't have a lot of tariff exposure, if you wish. So I think the whole thing is a big overreaction. But then again, that's the markets for you, right? So I'm going to start off range bound. We are back up in this upper range. Assume that we are staying in this range right now. So starting off range bound, looking to sell strength, buy weakness. If the trade below that 55, 60 to 70s, again, we're back on the short side of this. If this starts trading above the 56, 50s, we may start thinking about the long side and see if they can retrace this a little bit to the upside. We have this big volume edge here at the 57.30s, coinciding with our pretty good support area. So that's the one where when they took that out, that's when things really started happening on the downside. So that was a key support area which came out, big volume edge. We are down in this light volume territory probing at this point. There's volume here still, but this is like a 6 months chart. So a lot of it tapers off, and that just tells you that if you haven't been there for 6 months, yeah, you're in pretty new territory, pretty virgin territory. So at this point, starting off range bound, looking to sell strength at 56.30s, 40s, 50s for rotations back down. I'm going to move this one off the chart for a second here. And do this. All right, so 56 30s, 56 40s, 56 50s. If it starts trading above that 56 50s, I think we may have a shot at for a retracement. We'll see we'll see how far they can take it, but at that point, it could be a long trade in developing. And until they can get up above this 57 30s, and you can see we're quite a bit away from that. That's when you hit that level I talked about on the capital flow chart. This level right there, you can see it in its you see here this is like support, probing down support, the good support on the way down. It's going to be pretty hard resistance on the way up. So if they can get up above that one, that's when I start thinking about capital flow and turning it around and start thinking about the long side of the market in a more of a capital flow perspective. At this point, capital flow is still heading lower, markets is pointed lower, and there's no reason to be aggressive on the long side just yet. But just to get started, at least since we gapped up on the new expiration, I'm going to start off range bound and see if they're going to try to take this higher, or they're going to be right back down here flirting with the lows in no time. So initially looking to sell strength against the 56 30s, 40s, and 50s for rotations down, and then looking to buy weakness at 56, 55 90s, 55 75s, and 55 60s for rotations back up again. If they are down below that 55 60s, I'm going to be back on the short side again at that point, looking for a move. So they take out this 56 55 60s, and you can see they 1 2 3 they've been down here at that level a few times, stalling. One time they probed it. Yesterday they were down here and really did a job on it and closed below it. So that was a weak close and was ready for a move to the downside. But as you can see, the gap up changes everything. So doesn't mean that the gap can't just turn into a just kind of crumble and head right back down again. But at this point, I would start off range bound and I watch this edge 55 60s, and if that holds, I'm going to stay range bound for the trading day and see if we can get something going. But yesterday was another extension to the downside, so technically we're still extending this market profile to the downside. So 55.10, that's where we are right now. That's your low for this sell-off so far. But you can start seeing some bargain hunting going on in some of the big tech stocks. They were totally crushed in the beginning. You see some bargain hunting going on there. Some other sectors are getting hammered, and that's what makes this move to the downside continue. But you have some of those big tech stocks shaved off like 35-40%, and that's buying opportunity for sure. All right, so starting off range bound on the ES, it's a Friday. We have not a whole lot of news. We are in a rollover scenario, so this volume is still very light. So I would just trade it with a little bit of caution. I'm probably not going to do much trading today until I see the volume start filling in, maybe towards the afternoon, see what that looks like. But then when it's thin like this, you just have to be a little bit cautious about it. Either that or stay on the March expiration and trade that one for the day, one or the other. I just like to tend to roll it at the same time, and then look for opportunities. And maybe if I miss a half a trading day, that's worth it instead of messing around with stuff. It's just me being lazy about it. So that's the ES to get started. And let's take a look at the NASDAQ and the bonds. Bond market hasn't moved a whole lot. They are right back down. So they're trading in this middle of this range, right? So they are in between these two high volume areas. It's one here at 117.20, one down here at 116, 116.08. And they've pretty much been going back and forth there. So I would just keep folding stuff together like this. You see that it's just going sideways. So if I fold those together, you can see this is the area I would expect it to trade in a little bit more aggressively. So back and forth between the 114.20 and the 117.16. I must just keeping that split out still. But that's a low volume area. It's not a low volume, but it's an area which need to be filled out. So I'm probably going to be trading back and forth in that area. So as long as they hold here, I think the rates are in a range which is not going to cause too much heartburn for the market. With a starting off range band on the bonds, looking to buy against the 1612s, 1604s down to the 116s. Looking to sell strength, 1624, 17s, 1706s up to the 13 to 14s here for rotations back down again. So that's the range. Below 116 or above 117, 13 to 14 here, we may have a directional move, but that's how we get started on the bonds today. All right. NASDAQ, pretty good move on that guy. Gap up as well. Pretty good move to the downside, I meant, and then they gapped up. Yesterday's, again, weak close yesterday. Day before rollover, gapped up pretty well, pretty good, and then they've been holding up here. Also, volume is pretty darn light on the NASDAQ today, so I would just stay on the sidelines initially, watch the range, watch the direction, and see what they're trying to do. Initially, starting off range bound, and then let's see if they can take out the upper area. It's going to be 780s here, 19780s. So looking for shorts against the 690s, 730s, and the 780s for rotations back down. And then looking to buy against support. Initially, I can scroll it up. Initially, 570, 530, 490s for rotations back up again. Now, if they start trading, if I go down a little bit further here, if they start trading below the 270s, that's the level from yesterday, I would start worrying about the short side. You have one pretty good edge here at the 390 to 400s as well. That's a good support area. So you can key in on that one as well if you want to be a little bit more aggressive. So below that 390 to 400, you can start, you can lean in on the short side. I would give it down to that. There's a small volume edge right there. It's getting actually less obvious now, but this is a pretty good volume edge at the 400s, and then that 270s, and this one should actually be a little bit lower. I missed that one. This one should be down here. This guy should be down there. Oops. I want that one right there, that 4-letter edge, like so. So that 4-letter edge at the 180s could be interesting. But if at this point, if they're trading below the 400s, I would be less aggressive on the a lot less aggressive on the long side. So looking to buy against that 580s, 530s, 490s down to the 390 to 400s for rotations back up. And if they trade below the 400s, I'm taking off that range bound and start thinking about the short side. I would key in on that 240 to 250 to 270 edge as well. That could be interesting. But it's at this point below that 400, I would be leaning towards the short side and see how far they can take it. All right, so NASDAQ gap up. We'll see if what they can do with that. If that's going to turn into something interesting. Finally, oil and gold. So starting off range bound on the ES and NASDAQ at this point. We're all over. It's going to keep me on the sidelines for a bit to see, just to wait for that volume to fill in. And you can see on the NASDAQ how thin that is. It's pretty darn thin at this point. And then oil and gold. Gold, major move yesterday. I tried to short there against strength, and that turned into be a dud. But gold in a big move to the upside. They hit 3,000 and then some, 3,015 on gold. So I would trade it from the long side of the market. So look to buy weakness at this point. 3,000s, what is it? 3,005s, 3,000s, 29.95, 89 down to the 86s. If they start taking out that single print F at 87 here, I would be thinking about the retracement trade and see if they can take this right back down again. If you want to be more aggressive, you key in on that London low and 29.95. They start trading below that one. You can potentially start thinking about the short side. I would give it a little bit more range since it's so volatile. So looking to buy against the against the 3,005s, 3,000s, 29.95s, 29.89 to 90s, and that single print 29.86, 87 here. for rotations back up again. And if they start taking out that single print, that's when I think we have more of a retracement trade developing at that point. So we'll see. But at this point, the major move to the upside on gold, that came out of nowhere, right? So big move on gold to the upside, and there we are. We're taking out the highs in price discovery to the upside. So move out of the middle to the upside on gold. No need to be aggressive on the short side. I tried a short trade yesterday. I think it was right at this upper edge, and that did not work. That just tells you that the market, the move out of the middle is for real, and they're going to head higher. So I'll trade gold from the long side of the market. And then oil, yes, range bound. We're rolling that on soon to the to check the date. I think it's the 15th or the 17th. I forgot. I have to check. The range. I would just trade it as a range bound market on oil. They're not going anywhere right now. If anything, they've been going down. The little burst of activity you get is all about. It's all about a headline or something like that, and the market is getting spooked. But at this point, heading lower, we have taken out these lows, and we are extending in a pretty orderly fashion, I have to say. So we are down below this support area. That's now the attractor area, that exact edge. So I would just expect them to keep probing to the downside and moving this lower in a very orderly fashion. So that's good. And that's going to make a big difference in energy inflation. So we have some good things happening. Prices on energy coming down, that would be awesome. Alrighty, so that's oil. So range bound oil at this point, looking to sell strength 67.30, 67.80, 68. Looking to buy weakness 60, 67, 66, 66, 60s, 40s, down to the 66s for rotations back up again. So pretty darn range bound market on oil. 3 levels up, 3 levels down. So shorts against the 67.30s, 67.80s, 68 20s. They're going to buy against 60, it's actually 67s, 67s, 66 60s, 66 40s, and the 66 even. That's hard to say. That's too many with sixes. Anyway, so range bound oil. I'm not going to be very aggressive on oil. Gold may set up for nice opportunities. Looks like they're pretty volatile and moving, at least for now. So you just have to be cautious because this is moving a lot. So you have to really be on your game here in terms of trade location. Then back to the ES. So Friday, rollover, light volume. I would not be super aggressive on this market right now. I would just let it build and let the volume roll, and then see if the rollover is going to turn things around. Sometimes that rollover, we've been seeing a pretty good move back and forth. Yeah, it's a huge difference in the beginning, and hopefully that tapers off throughout the day. So it's we'll see about midday or so. Hopefully, going more like an even split, but. That's the rollover. If you have to roll one day. If you roll one day late, you'll get kind of the opposite. Almost you're trading too light volume on the March contract, and then I just tend to roll it when we roll it, and then kind of wait a little bit and watch it. They're still tradable. I just would not be very aggressive about it because it's when it's light volume like that, you don't need much for a big change in prices, and that just can get you caught. But we'll leave it there. So see how this day shakes out this Friday, March 14th, halfway through March. Only one piece of news, and that's consumer sentiment at 10. So we'll leave it there. But good trading, guys, this rollover day. And I'll see you guys back at 11:30 for the next update. Later.